that this is a rally that's not just a very short-term blip. It's very meaningful to people who have been out of the market and haven't put their money back to work, who are really going to feel that they're missing something, that the economy has done better than expected. We are not in a recession. Inflation is coming down and interest rates are close to peaking.
And you see expectations shoot up in terms of the likelihood of a pause, or what I guess we're now calling a skip. So I think we'll continue to probably see some jumping around within the market in terms of leadership, very much driven by the short-term trend that we're seeing in economic data.
Hello and welcome back to my channel. Do you think the market has already priced in recession, or do you think there's more downside yet to come? Are you curious about what the future holds for the market and the economy? To answer all your doubts away in today's video, Raoul Pal has shared some of the forward-looking perspectives for the market and the economy. He has some amazing charts and predictions that are going to blow your mind. You don't want to miss this video, trust me. To know more details, stay tuned until the end of the video. And if you want to stay up to date with the latest crypto insights, the markets and the economy, be sure to hit that subscribe button and the bell icon. Okay, are you ready? Let's get into it.
My general view is, from the work that we do at GMI, I think the market's priced in, and I've talked about this many times, a recession last year. So the year-on-year rate of change, I'll show the chart later, of the NASDAQ got down to expecting the ISM to get to 37, deep recession. So we're on the backside of that as future liquidity is increasing. But also, you know, a simple thing is, if you go back to 2018, the moment the Fed paused, the market's ripped. I've always said, you know, after you've gone through a whole miserable year like last year, and you've got things like technology that's advancing, the narrative kind of builds and builds and builds, and the Fed take their foot off the beach ball and it's underwater, it explodes higher. And so you've got this kind of crazy disconnect where people can't get their heads around why the markets are rising. And it's both a matter of, oh, finally we can own equities and take some risk again, but also there is an underlying forward-looking element of the liquidity cycle and the business cycle that's priced. We're still in the downside of the business cycle that Darius and I will both go through in a bit, but markets often like to look forward somewhat, and that confuses people. People always look at today as the snapshot. Today's actually never the day. Today's news is not the important news. The important news is what's going on in the forward-looking stuff.
We have some exciting news for you. This week, we'll be doing a free live Q&A with Samuel Plesnick, our master trading coach. He'll be answering all your burning questions about crypto, trading, and investing. Here's a message from him.
My name is Samuel Plesnick. I've been managing 2 crypto funds, and I've been also a market maker in top 10 crypto exchange. I would love to invite you to our special Q&A session with me, which is going to be Thursday, July 20th at 11 a.m. Eastern Standard Time. I will be sharing my strategies there. I will be sharing there what does it take to become a successful full-time trader, and I will be also answering your questions that you might have about trading. Click on the link below, join me on our Q&A session on Thursday. So looking forward to talking to you. Ciao.
What does Raoul Pal think about the market? Well, Raoul's general view is that the market has already priced in last year's recession, and we're now on the upswing of the business cycle. There's a lot of forward-looking factors at play here, folks. According to him, this market rally is a perfect storm of relief and anticipation. Raoul says that the market is going up because of 2 things. First, people are happy to invest in stocks and take risks again. Second, people are looking ahead to more money and better business cycles. Right now, we're still in the bad part of the business cycle, but markets don't just look at what's happening now, they look at what's coming next, and that is where the good news is. Let's get into the next clip to see some of Raoul's charts for markets and the economy.
Here's the chart that I've not shown anybody yet. This is the Fed balance sheet versus the interest payments leading by 36 months. And this goes back all the way back to the beginning of QE, and it's amazing. Now, it's suggesting now should be in the, you know, obviously we had this little spike from the banking issue. Now it suggests that it should be slowing down in its rate of change and eventually starts going up in Q3. Let's see, right? We've never used this before as a forecasting tool, but the correlation between this and the longer term version of this was pretty staggering. It's like, holy shit, it's just 36 months delayed payments is coming on the balance sheet. So that's the big hypothesis. So there's the weekly liquidity outright versus the NASDAQ, which is the one that you'll suggest, okay, this is probably rolling over. Maybe the TGA sucks from this. We don't know yet, but look, it's not going up, but the NASDAQ is. So that's got a lot of people saying, well, it's decoupling from liquidity. However, back in 2018-19, when the Fed stopped, it completely decoupled from liquidity then. This is this beach ball effect. So I'm like, okay, that's not unreasonable. I get it. And the year-on-year rate of change of liquidity and the NASDAQ is consistent. So I'm like, yeah, that's fine. I can see why the NASDAQ could outperform at this point. Crypto in 2019 at its peak was up to 300% and then came back being down 100%. It pulled back for most of the back end of the year. So it's like, okay, fine. We can see that as animal spirits come back in, the year-on-year rate of change of liquidity. So I've been looking at that the NASDAQ is outperforming liquidity. This financial conditions index was the thing that gave us a 9-month lead where we think we are on the business cycle. So whether this is the exact match dates or whatever, but it suggests we've got one more blast lower below, let's say 45, before we start basing. Now, as you know, the economy actually, GDP comes out a quarter later. So, you wouldn't see these numbers and you won't come out of a recession, even though it looks like it's very V-shaped from this. It suggests that, obviously, I think there's a lot of slowness to growth to come out of commercial real estate, the banking issues, a whole bunch of stuff.
The Financial Conditions Index is like a crystal ball that tells us where we are in the business cycle. It gives us a 9-month head start on what's going to happen. Raoul Pal emphasises that there are still problems with commercial real estate, banks, and other stuff. Raoul's chart also shows us something interesting about the balance sheet growth. It's a way of injecting more money into the market and keeping interest rates low. Raoul's chart suggests that the balance sheet growth might slow down soon, which means less money in the market. But it also suggests that it might pick up again in Q3 or later, which means more money in the market. This could have a big impact on asset prices and inflation. Let's get into the next clip to hear more from Raoul Pal. But before jumping ahead, be sure to give a big thumbs up to this video.
All we're saying is forward looking, our financial conditions suggest, okay, things are on the rise. And this leads the Goldman one by about 6 months or so as well, or 9 months. And that's what gave us this view on the NASDAQ, is the NASDAQ had priced for us 37 in the ISM. So that was like, okay, interesting. And that was where we thought from the financial conditions index, the ISM could go. So I'm like, okay, it seems fully priced. And most of the other asset prices were doing that as well. So that's where we got to roughly with our thinking with this. And that helped us get long at the right time. The other liquidity cycle we've used, just simply because it seems to be a better fit on the year-on-year basis, is global M2 seems to work very well for Bitcoin. And that turned higher. Obviously, we know the Chinese have been increasing M2. I don't know where it is, 12.5% or so right now. And that's dragging this cycle higher. And I think probably global M2 goes higher. So again, not looking for the wiggles here, looking for direction. We've probably got a M2 cycle at play globally. So whichever major countries that's a part of, and that should drive crypto. The other one I found really interesting, and I think I'm the first person to have found this one. Here's the ETH Bitcoin cross. Now, this will make sense to you. You're a financial markets guy. Stuff like junk bonds work out well from the bottom of the cycle upwards because they're riskier. So the smaller, less liquid asset tends to do better. The ETH Bitcoin cross seems to be a function of the ISM, which is the money supply and the business cycle, which is really interesting. So it suggests we should be going into the Ethereum zone versus the Bitcoin zone. It gives forward projections of NASDAQ, very high, and crypto and everything, but it goes all the way out to 2025. And our top of the liquidity cycle, because we use the China credit cycle and a few other things to go further into the future, that still doesn't suggest we get to the year-on-year rate of change of 0 in end of 2025. So it feels like we're set up for a big cycle. Kind of makes sense to me because we've got a broken banking system. We've probably overhiked rates. We're going to have a sluggish economic cycle, and and so in comes the cowbell. So anyway, that's my overall view.
The future looks bright for the NASDAQ and crypto all the way to 2025. He highlighted that it seems we're in for a big cycle, which fits with our broken banking system, possibly high interest rates, and a slow economic cycle. But what about you guys? What did you think of Raoul Pal's view of the market and the economy? Do you agree or disagree with his charts and predictions? Let me know your thoughts in the comment section below. And of course, don't forget to subscribe to my channel for more updates on crypto and the economy. Also, be sure to give a big thumbs up to this video. Thanks for watching, and we'll see you next time. Adios.